This is Tom Aspray with the Viper Report Market Wrap video for the week ending January 3rd, 2025. Welcome to the new year. In the financial media last week, the prevailing talk was why a correction was likely and how that would be a good thing for the stock market. It took them a while to get to that point. Let's look at some charts that we've been discussing since the start of the month. This chart of the S&P cash shows that the advanced decline line on the S&P 500 turned negative on December 6th, as indicated by this vertical line, indicating we're in the correction mode. Subsequently, we've been a downward path, but actually, as we'll discuss in today's somewhat abbreviated report, there are some signs that the worst is over. That is supported by last week's survey from the American Association of Individual Investors, dropped to their lowest level of 35.4 since the end of April. What happened at the end of April? The market had completed its correction and started to move higher. See, bearishness has risen too. Neutral camp, you can see the progression here from 43.3. So both the percentage of bullish is below its long-term average, and the percent of bearish is above its long-term average. Of course, the bullish percentage hit 52.7 in July, and once again, we got a correction. This one indicator is not infallible, but often dovetails nicely with some of the technical studies. For the week, the S&P was down 0.51%. QQQ NASDAQ 100 was down 0.76, and the New York Composite actually managed a small gain. You can see 0.08%. To measure the broader market, so not influenced like the S&P or the Qs can be by the big 7 tech companies. You can see that the lows in the past couple of weeks, right back into the support from June, July. Down here we have the stocks only advanced decline line. It has stayed positive throughout this decline here, holding above its moving average. And this week the NYSE all, that's everything on the NYSE composite, has flipped back above its moving average. That was a result of the fact that on the NYSE there were 1,767 stocks advancing and just 1,083 declining. Similar positive numbers on the NASDAQ composite, with 2,721 advancing, 1,868 declines. New lows were still greater than new highs, but as the market corrected last week, it was an encouraging sign that there was not an expansion in the number of stocks making new lows. Typically, you would see that in advance of a sharper decline. Though there are some encouraging signs, not totally out of the woods yet, as you can see that the weekly Spider Trust dropped back to its 20-week EMA, 581, is often a good level of support. The AD line has moved a little bit further below its moving average that has flattened out. So it needs a strong week or two to push back above its moving average. The fact that the AD line did make a new high in the last couple months is a strong sign that the overall uptrend has not changed. If we flip to the daily, you can see that we're seeing some signs of bottoming here too. So the first sign we'll be looking for next week to suggest that the worst of the selling was over is to have the S&P AD line move above its moving average and then the prior peak. The daily chart of the SPY shows that it closed just a few ticks above the new monthly pivot at 591.34. This low we had on Thursday, which was 580.50, is now good support. You can see this prior low here was 580.91. So a move back above the 20-day EMA at 593.81 would be a good sign. You can see that the AD lines show potential bottoming formations. They need some more on the upside here to confirm, just like in the weekly. You can see the NYSE stocks only, has made a pattern of higher lows and, is still below its moving average. NYSE all is getting much closer. And if we look at another sensitive measure of the NYSE advanced decline numbers, it has turned bullish. That is the McClellan oscillator. Those who have taken my advanced decline line course will know that oftentimes, it goes through periods where it's not as helpful, but it's been pretty good in the past year. And so, these little shaded areas show when it crossed above the zero line, dashed in red, it was confirming that the correction was over. Also here in early September, you remember everyone was talking about the start of the month, oh God, prices got to go lower in September. Seasonal is crap, and looks like it should, we could see another 10% drop. Of course, we had a strong month in September, and then corrected, into late October, into the election. Since then, we've moved strongly back above the zero line, showing this bullish zigzag formation. So, 19,403, that's the 20-day. Look for a close above that early in the week. In terms of growth versus value, it turned lower last week, made a slightly higher high than we did in July. So, interesting formation here, potential double top. We talked about that back in here. And so we'll be watching it. MACDs don't suggest anything more than a pullback at this point. No expansion in the new highs last week. You can see it's still quite low at 38 and 58 new lows, but also no expansion in the new lows, which is a sign of strength. Oftentimes in the middle of a correction, like in August and September of 2023, we saw a big buildup in the stocks making new lows, and of course we saw that huge decline in September and October of 2023. So that's an encouraging sign. We've seen something similar in the NASDAQ composite, 93, on Friday. Actually, the new highs outpaced the new lows, which has not been the case recently. As I pointed out a week or two ago, we had what looks to be a significant oversold reading in the NYSE advanced minus decline oscillator. On a daily basis, you can see it got close to minus 1,400. That was the lowest in 24. And we had a nice rebound. Right now it's at 514. It's in the mid zone. We could get a spike back up here. If we get a spike above 1,200, it would suggest significant buying power. There was some improvement last week in the VIX and the VXN. Despite all the talks about a correction and the dropping bullish sentiment, you can see that the VIX dropped back below its moving average. So engaging this, I look for new uptrends or downtrends and a relationship with a 20-day EMA. So, when last week we pushed above it, we were looking to see, well, okay, is that moving average going to start rising, or is this a sideways action? Both have dropped back below their moving averages. So we like to see a move now below this prior low to suggest decreasing volatility, which is typically bullish for stocks. Not much in the put call ratio, still pretty low. 81 on Friday, 1.4. So despite the commentary, not a lot of bearishness based on the put call ratios. We had some issues with this week's T&J watch list, and so just an ETF report we set up, but this is one of the more important times for the ETF report in the year. 4 times a year we publish new quarterly pivot levels. You can see in this column here, Q pivot. They act as support or resistance for the next 3 months. They're based on the price activity of the last quarter of 2024. So the pivot itself will be a support or resistance, and we can also look at R1 and S1 levels for resistance as well as support. You can see that, typically, if these are highlighted, in green, for example, AIEQ closed at 40.64. That's above the quarterly pivot at 39.41. As is Tesla, well above its quarterly pivot. And Cloud also closed at 24.72, above the pivot at 23.28. This report was sent out to all subscribers, and if you are not a subscriber and just watching the video, if you email us, email me at tom@viperreport and put Q pivot in the subject line, we'll send you a free copy of this. And these numbers are good, all week. So oftentimes you see a change in trend. We also have, our DTS and weekly DTS signals. You can see here all the ones that are new signals for TRIP and SMH, but all the rest of these are positive weekly, and now some have also flipped back to daily positive or negative for natural gas. VBK is one of my favorite small cap growth, and it just flashed a daily buy also. So pretty interesting information there. If we zoom down here, you can see that overall the market has been correcting. Only 34.4% are above their quarterly pivots, and you can see the growth gauge. 80% of the growth are, 70% have a weekly positive signal, and only 10% have a daily positive. Value is doing worse, 27.3, not too surprising. But you can see XOP here has closed back above its quarterly pivot. XLF is acting quite well, as is XLC, which has been one of our, what we call the Teflon sectors since 2023, and it's looks like it's completed its correction also. So looking at the inverse and leveraged, not the short side, the DTS, the daily flipped to 100, but you can see the weekly, is negative, and most of the inverse are still below their quarterly pivot. This suggests a failing rally, whereas the leveraged long ETFs like the TQQQ, are positive in the weekly and above the quarterly pivot. So we'll just look for a daily buy here to confirm that the correction is over. Well, that's all I have for this week. We'll get back to you later in the week for subscribers to get the full watch list, and hopefully we'll have the problem corrected by next weekend. Look forward to another very interesting year in 2025. This time last year and in 23, we're very bullish on the stock market, and for now we are as well, though that could change during the year. So don't get tied to your positions too much. And as always, you can go to theviperreport.com to find some of my recent articles, and also those from Forbes, as well as a way to sign up for either my one-on-one training or my publications. Have a great next week.